Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, December 1st, 4:54 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend since the November 1st and 2nd O'Neill follow-through days. Check the trend gauge over here. Market leadership showing the green arrow, acting really about as good as you could expect, honestly. Then checking the five major indexes, all five trending above their short-term 21-day exponential moving average, above the medium-term 50-day moving average, and some improvement here on the long-term 200-day moving average. Small caps, we've been watching it for a week and a half. Three failures to break above the 200-day, but a strong break above today. Brought out the green sub arrow. If we close next week above the 200-day moving average, we'll gleefully insert a green arrow for the long-term trend also. So what happened today? I was really not expecting this, but the market, when you expect something, you don't get it. But 11 o'clock, Jerome Powell was making a speech. It was initially the text of the speech was released, and it was initially, when I say initially, just for a few minutes, perceived as hawkish, and the market sold off a little bit. But as you progress through the body of the speech, he stressed how the steps that they've taken to tighten financial conditions are showing up in the economy, but they have not taken full effect yet. And the result of that was a breakout rally led by small caps in a major way, and a jump back from May to March in the prediction of the Fed funds rate for when the first rate cut is going to happen. And that was very clearly seen as bullish. Well, bullish unless you're one of the big seven, but we've been harping on this for about a week as they've lagged pretty badly all week long. Here are the final numbers. Big seven down an average of 0.23%. RG8, great to see this, up 2.51%. We created this index back in 2021 when small and mid cap growth stocks, which led a furious rally all throughout 2020 and through the first month and a half of 2020, fell off a cliff while the indexes held up, and led to an improvement in our process. We monitor 8 ETFs for signs of strength or weakness, and we're seeing exactly what we want to see out of the RG8, up an average of 2.51%. S&P 500 opened down 0.18%, and big breakout after 11 o'clock. Made highs early afternoon, then based into the close, but we'll take the positive close up 0.59%. Even better, the broad equal weighted S&P 500 RSP ETF up 1.5%. We took a 10% position in this yesterday, and that's really paying off. NASDAQ 100 lagged. When you're heavy with the big seven, you're going to lag, but at least finished positive, up 0.3%, and that was because of the non-big seven with the equal weighted NASDAQ 100 up almost 1.1%. FNGS, this is the FANG Plus index. That's the big seven plus Snow plus Netflix plus AMD, was actually red on the day by 0.5%, and that fits with the weakness that we're seeing in the big seven. Dow up 0.8%. Here's where the really a welcome sight here. Mid caps up 2.4%. Russell 2000 up 3%. So after three failures, finally breaking through on the Russell 2000 up through the 200-day moving average. Global 60/40 stock and bond up 0.74%, pretty much split between gains on stocks and bonds as interest rates pulled back after that Powell speech. In-house GROTECTION up a nice 1.05%. Let's get into some charts, then the tail of the tape, and wrap up the week and start next week and see if Santa Claus is going to deliver the goods for the market. So here's the S&P 500. Let's go to this 30-minute chart that we've been really focused on in this 4568-ish area where we had a false breakout on Wednesday, pulled back, tested the bottom of the range, breakout, and held it today. We'll be monitoring this 4568 level. Any pullback should bounce off this level and attempt to take it higher. Let's go to the NASDAQ 100 now, and you can see that false breakout on Wednesday was not recaptured, but we did hold the lows of this range, and we'll be watching now to see if the Big Seven can start to participate again and break above this 391-ish area where we failed a couple times now. Okay, if we don't, though, we've got plenty of other opportunities to pick from, and that's the sign of the healthy market. Here's the Dow Jones Industrial Average, back-to-back very powerful days going up through that 36,000 level. Let me show the daily on the NASDAQ 100 very quickly. And you can see we undercut and reclaimed the 8 EMA each of the last 2 days. The lows of the prior 2 days are pretty critical. We want to keep an eye on that because as it's showing some support in that area, which corresponds to the bottom end of that range that I just showed on the 30-minute chart. Now to the good stuff, mid caps. You can very clearly see while we were trending higher, making higher lows, while the S&P 500 was going sideways, we were seeing some relative strength on mid caps, and that was rewarded in a big way today, up 2.42%, and now small caps. Let's try that again, and now small caps. You can see the 3 failures a week and a half ago, twice this week, not today though. Powering through in a big way, up 2.92%. Let's look at this RSP, the equal weighted, and you can see this is the equal weighted S&P 500. Definitely a different picture versus what we were seeing on the S&P 500 as this did break out on Wednesday. Pullbacks held and now following through to the upside. Again, that's the equal weighted S&P 500 and the equal weighted NASDAQ 100 also making a higher high, holding the 8 EMA. So broadening breadth is improving vastly. That's the bottom line here. Anybody saying that the market is only 7 stocks now does no longer has a leg to stand on. Anybody pointing to macro weakness for a reason to be bearish also doesn't have a leg to stand on. Those are opinions. We deal in facts here. We deal with what the market is actually doing, not what experts, so-called experts, think the market should be doing. Let's go to the VIX now. VIX continues to support the contracting daily average on the S&P 500, down 2.24% today. Reading a bunch of people saying the VIX is too low, the market is going to have to pull back. But until it does, again, that's just an opinion. Let's deal with facts. Let's stick with those facts. Dollar pulling back after an up day yesterday, down 1/3%. How did that translate into the precious metal complex? Well, there's a big breakout in gold. Up 1.73%. Ted did a good job breaking down this on our podcast. Make sure you check that out. And the setup that he showed in the podcast on Thursday very clearly came to fruition today. Let's follow that up with GDX also breaking out after three tight day closes. We're playing gold via NUGT, which had a great week. Let's see what this was up for the week. Up 17% on the week. I'll take that any day of the year, especially with the S&P being up less than 1% on the week. So there's NUGT. Let's see, silver, SLV. Silver up, making higher highs, up 0.86%, and Bitcoin starting to get rocking here. Up 2.12%. That's a higher close, not a higher high. Still, the higher high was made last Friday, so we've still got room to run on that on Bitcoin. Now let's flip the bonds. Bond prices up across the board. You know, if the prices are up, that means the yields are down. And this was an outside reversal here. Let's look at an intraday chart. And you can see when Jay Powell was talking right at 11 o'clock, that's when the prices broke out, meaning the yields broke down. Let's go to TLT, same thing there. Same formation intraday, making a higher high, which means the 30-year yield is going to make a lower low, and it did right there. TNX, the 10-year, down 3%, also making a lower low. This is, as the bulls really couldn't ask for much more than what we've seen over the last couple of weeks, starting with that follow through day on 11/1. We got the cooperation of the dollar, cooperation in bonds, cooperation in mid and small caps. So let's go to the tail of the tape now. You can pause this. I'll hit the highlights. 7-day consolidation breakout on the S&P, so 1 day up, 22 days above the 8 EMA, 21 above the 21 EMA. A lot of sector standouts. 11 out of 11 of the S&P sectors were up. So as I said, a broad rally led by ITB, which is the home building complex, KRE regional banks, gold, and silver stocks, retail, and XLBIURE. None of these are a tech. Broadening rally, good for the overall market. On the downside, dollar, bond yields, and Chinese internet, KWEB. So when the market's telling you that the pullback might be over, any exposure that you took off, you need to look to add back. We did that today, adding to Nugget on the breakout, adding to CrowdStrike after the consolidation on the gap up. Remember, we trimmed this into earnings. Added back UPRO. This is the equivalent of SPXL, but we can track it separately because it's really a fresh rally making the higher high. So we added that, bought Palantir as it cleared the 20 level, trimmed the laggards. That's Lilly and NVO. I'm going to go through the portfolio before we wrap up the week, but the bottom line for the week, Powell speech sparks broad rally led by small and mid caps. Big Seven continues to lag. Good stuff for the market. Let's first take a look at 3 amazing gaps up after hours yesterday. We're not in any of these, but we will be monitoring them for follow-up entries based on pullback to some of our criteria. Path on 27% on 700% average volume. IoT up 26% on 600% average volume, and ESTC. You don't often see 3 software stocks breaking out like this in the same day on earnings, up 37% on 831% above average volume. So very clearly we'll be monitoring these 3 for entries going forward. Didn't buy them on the gap up day, but that doesn't mean that they're not that we missed out on them. We'll monitor them and look for low risk entry points. Let's go through the portfolio now. So we own in order, these are going to be in order of biggest own via ETF, and then biggest position to lowest position on stocks. Obviously, our biggest position is the S&P 500 via SPXL, UPRO, and the equal weighted RSP. We also own QLD, that's the NASDAQ 100, and we also own TNA, which is the 3 times small caps, and we'll definitely be looking to add to this one after that clear breakout today. Onto the sectors, we own NAIL, the underlying is ITB, which broke out today. We own Nugget, which is GDX, is the underlying on that breakout today. And Bitcoin, already showed Bitcoin. Now, largest to smallest position, we added Crowd, 2 buys in Crowd today. So back to our 6% size on that. That's the highest, biggest position that we own. Next up is PDD, consolidating after its earnings move higher. Datadog pulling back from that 120 area. Look for a little bit of a consolidation here and then for another move higher, and we can add some back at a lower risk. It got to +4 ATR yesterday. That's just very extended. Duolingo looks to survive its pullback. Today's low will be critical as the 21 EMA will be catching up to today's low early next week. A little bit of a laggard here now. AMD laggard this week, but reclaimed the 120 level. NVIDIA, we trimmed some of this. 2 closes below the 21. This needs to get back above the 21 next week. Snow, inside day today and closed near the high of the range. So some strength came in later in the day. We just have a starter position in this, looking to add to it. Same thing with Palantir. We did our first buy on this today with the move through 20 after this fairly harsh pullback. But note the volume. Okay, so this first day of the big negative reversal on higher volume was when a hit piece came out. Somebody with well, not necessarily a hit piece, it was an analyst with a $5 price target. That trickled onto the next 2 days on lower volume, and then people started coming back into it. No above average volume over the last uh, 4 up days, but higher than, well, I guess I can't count this. This was a half day, but the volume's coming back in. It's a low risk entry. Should hold the 21 on any pullback. And if volume comes in, we're right at the top of the pivot from this, arguably putting in a high handle here from this cup base. And of course, we had the higher volume on earnings and after earnings where it got back up to the top of the base. So optimistic about that one, looking to add to that one. And then our two smallest positions now are the two laggards, which may be on the way out, NVO and Lilly. It may just be that these, as I said, these things have just run and it's time to rotate into some newer things. Lilly gapped up this morning at 600. Look at this 5-minute chart here. On some news that I think it was a Pfizer weight loss drug didn't have good results. So it gapped up on that. And look at the heavy volume here. This is selling. This is people taking the opportunity on the jack up to this to sell some of it. When the dust cleared on here and we broke below this, this is when we took off a third of what we still have. We have less than 2% size on this and on NVO now, but it's just being distributed, plain and simple. It seems like it's time to rotate into something better. After all, it has, nearly doubled or up 50%, more than 50% this year. Numbers are still good, but the numbers are always best at the top. That's going to wrap it. As always, like to hear from you. Email's don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. But we're less worried about keeping now and more focused on taking advantage of the opportunities that the market is presenting to us now. Trend gauge, moving averages, accumulation, price action, volume, relative strength. That's all you need in the market to stay on the right side, as long as you know what you're looking for. And with that, I'm going to wrap up the video for the week ending Friday, December 1st. This is Don Vandenbord with Revere Asset Management, telling it like it is.